Hello and welcome back to the Note, coming to you from an unexpectedly sunny New York. Now, New York may have dodged a blizzard today, but the S&P 500 didn't dodge a very bad day. It was down some 1.3%, its worst in some months. That's largely because corporate earnings have disappointed. Perhaps the most important, which I can show you here, are Microsoft, which announced after the bell on Monday, and obviously it's a big exporter, and its strong dollar had a very negative effect on the value in dollars of its overseas earnings. And then perhaps the one that had the greatest effect on sentiment was Caterpillar, plainly very exposed to the mining sector and to energy, as it produces machinery for them. It's a very global company. People were expecting bad results. They weren't expecting results on quite this bad scale. The strong dollar again was to blame, and the CEO even went to the lengths of urging the Federal Reserve, which meets on Wednesday, not to be too fast about raising rates. Now, put that together with a macro number that didn't look very good at all. Durable goods orders were actually negative for the last month. They've been negative for 5 months out of 6. Again, suggesting that a global slowdown in growth is affecting US companies, and you get that kind of reaction on the market. Perhaps the single most important takeaway from that is that the market is extremely exposed, extremely out on a limb to the notion that the US economy is strong and recovering, and very vulnerable, therefore, to any news or information that tends to contradict that. Should we be making a lot of that at this point? Probably not. The earnings season is only a quarter over, and it was wholly predictable that CEOs would be trying to use the strong dollar as an excuse if they had poor results. There is still a long way to go there. Also, it's important to remember the impact of expectations in all of this. People in New York would have been delighted by the winter wonderland conditions we've had today had they not been briefed to expect a blizzard, and had the city not instead made everybody's life very hard by preemptively cancelling transportation. Similarly, if expectations are more realistic, you won't get these kinds of bounces on the day that they're announced. For a classic of the genre, look at Apple, which announced after the bell. Somebody thought they got news about Apple during the day. Its share price fell 3.5%. After the results came out, which in true Apple style beat on both revenues and earnings, their share price gained that all back and then some, up 5%. It's all really about expectations.